Hello and welcome to today's packed weekend video, which will be very fast, and I will be diving beyond risk on profits made in equities. This will be about cryptos, precious metals, oil, copper, and we will examine whether we are suddenly in a risk-on environment or is it still a risk of market breadth, and generally how to position oneself in the weeks ahead. Starting with the weekly chart S&P 500. First thing you will notice that the advanced decline line and volume had not been confirming the latest upturn. Yet I had been predicting this upturn to happen for clients. So may seem contradictory, but as is so fitting these market circumstances, it had been possible to generate profits for that, on that, if one read correctly the macro environment following descent preparing the ground and Trump sealing the deal with the aftermarket announcement while futures were closed characteristic. Now let's go to the daily chart. Another fine day of ascent. However, stocks are not getting wildly overbought. So, is this glass half full or half empty? Shall we expect more of an upswing, or is this getting ready to roll over to the downside? Sectoral perspectives clearly confirm on this 5-day, meaning weekly basis, that tech had been in the leadership position, and I liked really the risk on turn, and I had been calling for that starting Thursday, early Thursday, that tech would be the one seeing greatest signs of accumulation, and it really doesn't matter this who will blink first, US or China, who will grant exceptions, be it energy, be it medicals, be it auto parts, one party or the other. It doesn't matter, stocks have been making up their minds, and not every gap had to be closed. I was clear throughout the weekend. Clients benefited mightily. This McClellan summation index shows that usually this is not the position for stocks to just roll over to the downside. So let's see how it goes, because remember, in this environment it's essential to have access to real-time information as to what I'm doing, daily analytics and intraday channels, because we are all just one or two meme tweets away from a market decline. So even if summation index and technicals are not yet pointing to that, the situation can turn on a dime. I've been clear about volatility index, volatility metric, my favorite one, weeks to short-term weeks, forming a triangle and trying to peak lower over the days to come. And it's more apparent when I look at the weeks itself. So this has been as well confirming the move in stocks to the upside, gradually to the upside. See how important the roughly 30 to 30 point, say maximum 5 area in weeks had been, and one can check whether we are nearing any kind of a support, any gap to fill, or whether and how much, by how much approximately can we expect stocks to grind higher still, and whether maybe yes, maybe no, those upper nodes point to sudden setbacks, at least on intraday basis appearing. Thus far, the price structure had been very clear and beautiful to read. Following the Trump gap, we had seen one-day consolidation, attempt to fill it some more, and that's when most were surprised, but not my clients who had been having the real-time information, be it swing or intraday, that stocks are going to go higher and more than test the top being made on the 90-day tariff delay announcement. They had tested that Friday, they had backtested following breakout above and closed on a strong note. Remember, this is happening against not confirming market breadth, but with still very risk-on sectoral perspectives and supportive volatility metrics. So the picture is, as always, quite mixed, and clients know already what I plan to do as to the beginning of next week in equities. When it comes to yields, we are seeing some kind of retreat, which is very, very welcome. However, it is not mirrored in the US dollar, and you know that I would have preferred to see US dollar above 100 to 101 to have a greater level of confidence in this stock market rally. Of course, this ties in well with my longer term expectations as to this market, which are being shared on a basis that whenever it is called for, I just talk it, otherwise I just pick the direction and turning points and set everyone up for success as best as I can. Diving into the winning place, Bitcoin. Last week I will be linking as well to that video. Thank you for liking these videos and subscribing to the channel. I was calling for 95,000 as the first level. We are there, consolidating, and this chart is not really looking bearish. Not at all. I'm still bullish Bitcoin. When it comes to gold, silver and miners, my call at the very beginning of the week for a retreat and reversal in gold had been fulfilled. Note as well that silver is not confirming the ascent, and who is the ascent in gold being driven by? It's central bank buying. Central bank buying and worries regarding the tariff situation set up for national debt financing and US dollar. So this ties in well with the difficulty that the dollar is having in appreciating, and see that silver is not confirming that. Gold to silver ratio, I discussed this and several other ones last week. Review that video and you will walk off with the conclusion that this is still quite a risk-off environment. However, do we see worries about immediate recession, US or not global? Not really. Oil, which had been part of another shift of mine during this week that was shared with Trading Signals clients, had been first setting up to go down, and when it had trouble declining more than one day following the clear downside reversal, I called for it to rather reconquer the 63, maybe even 64 area, and thus far it's on track as well. Copper, neither this one is sending immediate recession warning signs, is it? You can look as well at how the commodity index is doing, and we will be heading into another great week, the last one of April. So for now, have a beautiful weekend and make sure to benefit as much as you can from what I do.